Test, test, 1, 2, 3. What's going on, guys? So the FOMC meeting is today, and it's in about 5 minutes, right under 5 minutes, almost 4 minutes. I'm going to give it a couple of seconds for everyone to be able to start tuning on in. As of right now, before the FOMC meeting, NASDAQ market is up about 0.29, 0.3%. We did hit 52-week highs today. It did pull on back just a little bit, as it doesn't really surprise me that it did. I want to go ahead and double check very quickly. As of right now, the Fed rate monitor tool is saying that there is a 97.8% probability that the Federal Reserve will pause, and a 2.2% probability that the Federal Reserve will rate hike, right? Excited to see what actually is reported. It seems like the market is very, very certain that we are going to pause. And this will be the first time in the past 12 months that the Federal Reserve does not provide an interest rate hike, right? Pretty exciting. We've seen inflation at 40-year highs, at least in my lifetime. That's the highest rate of inflation that I've ever seen at 9.1%, most likely of your lifetime as well. Interest rates were being aggressively, just hiked with at the peak a 0.75% interest rate hike as we got into like last year, the month of August, September, October, stuff like that. So again, in about 3 minutes, a little bit less than 3 minutes, we will be seeing the market react to this FOMC meeting. I hope that you learned something new. If this is your first time tuning on in, welcome. I hope that I can be of value for you. If you ever have any questions, please do not hesitate to send me a direct message via Discord. You can refresh your screen, and it's going to be the first link in the description down below. And other than that, I just want to remind you, again, I do trade live every morning. You don't have to tune on in, but if you're trading alone and it's getting kind of difficult for you to understand what to do and what not to do, again, being able to have access to my live trading sessions. If you want to learn more about it, to see what it's like and to see if it's a good fit for you, it's the second link in the description down below. We're running our biggest sale. It's a one-time payment, lifetime access. And if you sign up today, you can watch me trade live as soon as tomorrow. So let's go ahead and see what is reported. Good afternoon. Let's see if, nope, it did not notify our people on Discord. So I'm going to make sure that I share it with everyone on Discord. So we are live. Here we go. All right. I do have a poll in that live chat. I do want to remind you that if you do want to participate in the live chat, you do have to be subscribed to the YouTube channel. So just a heads up on that. All right. 1.5 minutes left, again, for history to be made. We have actually 1 minute left, exactly 1 minute. So I'm eating my French fries. Don't mind if I do. I'm going to be waiting for the market to react and then trading based off of that reaction. All right. Okay, 30 seconds left. One of the things that we always say is do something now to manage or mitigate your risk, or forever hold your peace. So again, market's expectation right now, we're at a 98.9% probability, literally a 1.1% chance that the Federal Reserve will rate hike. So market, I don't think I've ever seen the market this certain. So excited to see how it reacts. 10-second countdown. 10, 9, 8, 7, 4, 3, 2, 1. And let's see which way we go. And there it goes. Market reacting in a negative way. Let's see what is reported. All right, wait. Is this going to be a dip buy? I will do a light 500 shares. Let's see. No, I'm gonna hold off. Market is selling off. Market's going to break even. What's going on? What did we report? It's a pause. Yep, forecast should be just 5.2, right? Yep. Market's reacting in a negative way. Is this an overreaction? Oh shoot, wait, I'm not supposed to be buying. Oh, I almost bought QQQ. Thank you. I'm trying to keep up with all of this movement. Here it goes. Let's see. Wait, still selling off. Let it sell off. The more it sells off, the cheaper I can get it for. Here it goes. All right. Boom. Huge sell-off. Why is the market selling off? Is it already factored in? Possibly, right? All right. Testing market support. Let's see what we got going on here. I'm going to buy 500 shares. Again, I'm going to keep it light. Again, I normally trade with over 400,000. Me buying $20,000 is literally less than 5% of what I normally trade with. Just so you can see that as a perspective, please do not copy my trades. Just because I choose to trade something does not mean that you need to agree with me. If anything, again, if this is your first time ever watching an FOMC meeting, sit back, relax, enjoy, watch the market's reaction. It's going to be a very volatile move most likely, and it's definitely not something that's designed for probably complete beginners. So I'm liking this movement. Let's see. Come on, there it goes. Yep, 5.25%. So previous was 5.25%. We're still at 5.25%, meaning that the Federal Reserve did not raise interest rates. This is the first rate hike that we've seen in quite some time. And we should be able to see the live stream today. So the live stream will most likely be 30 minutes after the market opens. 30 minutes after this is reported. So 28 minutes from now, Jerome Powell should be speaking and answering some questions. Here it goes. Let's see which way the market goes. And keep it light, keep it tight. Direction is still very unclear. So I'm not going to be aggressive with any position that I choose to take as of right now. Dip and then a rip. Always watch. Again, I'm excited to see. I do agree with you that the market reacts one specific way during the rate hike or the rate pause, and then it reacts a different way normally when Jerome Powell speaks. But again, things are different now, right? Things can definitely change. Market's been very bullish. I'm not going to go in with the 1500 as it doesn't make sense when direction is still unclear. We're going back to retest previous lows. This is pretty much day lows, right? On the day, we can easily break below the support. So again, the lighter that I stay, probably the better. Let's look at NASDAQ very quickly. I like looking at different time frames. So on the 30-minute, we broke below that EMA. We are far below that moving average on the 5-minute. Looks like we are going into an active sell-off right now. And on the 1 hour, we should be getting very, very close to that EMA, right? So we talked about this during our live trading session today, where on the 1 hour time frame, we've been validating the moving out, the EMA quite nicely. But we'll have to wait and see how the market actually reacts. So So they kept the same. So what that means for those that are tuning on in for the first time, so what that means is if they kept it the same, that means that there is a pause, meaning that they didn't increase interest rates, that they just stayed the same, which was what was expected from the Federal Reserve. I'm going to buy another 500 shares. Again, please do not copy. Just because I'm adding more does not mean that you need to. The RSI just looks oversold. So does the MACD. I personally like trading reversals. Reversals are very risky to trade during especially very volatile days like today. If you don't know how to manage your risk, then again, you shouldn't be taking any trade, especially during a very risky day like today. So there is no indication of higher highs or higher lows, which is why I'm still relatively very light with my position. The more that this thing begins to show signs of a potential reversal, or when it does show confirmations of a reversal, then that's when I can get into adding 1,500 shares, 2,000 shares at a given period. As of right now, I want to stay light because I see it to be oversold. I see there to be upside potential, but we don't have that confirmation yet, and because of that, I don't want to personally be super aggressive. And there it goes. We got TQQQ pulling on back. How backwards? Isn't this insane? Did we not talk about this during our live trading session today? LPP team, let me know. Did we not talk about this? How backwards is the market? The market goes up before because of what it's factoring in. And then once it's actually released, the market reacts in a negative way, right? Isn't that absolutely insane? The market that we live in. Ooh-wee. Insane. Insane time to be alive. Here it goes. Active sell-off. Still selling off. Still selling off. Buy the rumors, sell the news. I mean, that's why they say that, right? Insane in the membrane. What's going on, Rocket J? Happy to have you here, man. Thank you for joining us. All right, we have 4,000 of you guys here and yet only 300 likes. Yet you guys want me to stay here for another 24 minutes for us to what? Hear Jerome Powell speak? Come on, guys. We need to get to at least 1,000 likes. That's just a quarter of you guys. Do you guys not like these live streams? And here it goes. Active sell-off. The more it sells off, the better, right? Let it sell off. The cheaper it gets. Huge pullback. That has to be at the 1 hour. Yep. Breaking below the 1 hour EMA. 1 hour EMA being broken for QQQ. Check it out. Let's look at the 1 hour on QQQ. Yep. 1 hour EMA being broken. All right. Still dropping. Dropping like it's hot. Ask QQQ, where are my bears? I want to see a show of hands. Where are my bears? Wow. Huge sell-off. Where does that put us? TQQQ down 2% on the day. Still active sell-off. Look at that. Testing, testing, testing. Bear, 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 bear. We had a handful of people that I saw that were still holding their long position. And again, it made sense on why people were holding their long position, right? Market has been incredibly bullish. There was a 98 point something percent chance of a rate pause. And that's what everyone was waiting for. And there it goes. So now we are waiting for the next one, July 26, 2023. There it goes. Nice little bounce. Let's see if this is going to be it. Again, still want to stay very light when direction is unclear. It's very risky, especially entering this active sell-off. So told you, y'all made fun of me. I've never made fun of anyone based off of them sharing their opinion. Show me one time. Show me one time. I'm all for, everyone's sharing their own opinion. Never will I ever. I don't care if you go against me and you have a valid reason on why you think the market's gonna go up or go down, and I think otherwise. Heck no. I never. Oh, and there it goes. We have 1,100 likes. Really do appreciate that, guys. Thank you. All right, I'm gonna keep it light. Not here to overcomplicate it. Buying 500 shares again. Just because I'm buying does not mean that you need to. Please understand that. Now, who thinks that by the time that Jerome Powell speaks right now, let's note this. Right now, TQQQ is down 1.4%. Who thinks by the time that Jerome Powell speaks that the market could possibly be back in the green? If you've ever experienced a FOMC meeting, it's insane how quickly the market trades. It's insane, absolutely insane. And here it goes. I really like this uptrend. Adding 500 shares, direction seems to be favorable. We're still below the EMA. We're still below the moving average. This is extra risky, but again, I'm just explaining my thought process on why I'm choosing to do it. Already priced in. I think that it will 100%. It will go green. Again, nothing is ever 100%, but you know. All right. Let's see. Let's look at the 5 minute. Are we about to? Nope. Still too early. TQQQ. Gapping up. How beautiful. Okay. Wow, 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 wow. Okay, testing the super trend for the first time here. Let's do 1500 if we get that break above 1500, right? Keep it light, keep it tight. Anytime that it's oversold, a lot of people, and this is one thing you'll always see from me. I don't mind buying the dip. And I'm not here to encourage it for anyone. Again, I have a specific way that I like to trade, and I know I make mistakes all the time. But one thing that I always focus on is what? Position size. I trade with a certain dollar amount, and I'm aware of that. You are all aware of what you trade with. What's a 100% position size for you, right? So you should understand what a 5% position size is for you, right? Based off of the max amount of shares you can buy versus 5% of that. One of the things I always focus on is staying super light in the very beginning. Remember, my job as a trader is not to avoid risk, it's just to manage it. And by managing my risk, I choose to manage my position size. This is the beautiful thing, the beautiful part about trading, in my opinion, that you can enter very risky trades, but if you enter it in a tasteful way, meaning that you keep it light enough that, yeah, you take it seriously, but it's not so much that it makes you an emotional mess if things begin to go south. That is the beautiful part about staying well balanced, staying effective. I wish more people, when they were just getting started, understood the beauty of not trying to make it or break it, right? That they stayed light enough to focus on the important parts of understanding what you are doing. And again, I guess only time will tell. There it goes, getting rejected. So good thing we have not added. Again, we didn't get that confirmation that I was looking for the break above that super trend. So if I don't get that confirmation, then that means that I have not earned the ability, right, the opportunity to add more to my position. And at this point, I would rather just still stay light, right? Didn't they announce the rate hike already? They did. Yeah, so I should take this down. And poll. So again, the poll was correct. 70% said that there was a rate pause, and that's exactly what it was. We had the expectation of 5.25% with no rate hike, and that's exactly what it was. No rate hike, and we're still at 5.25%. We didn't do a rate cut, right? For those that are a little bit newer, you might be asking, why are we still at 5.25%? That number will only go down when they begin to do rate cuts. So this is good. This means that moving forward, it's not that they can't provide any more rate hikes. It just means that this might be the potential pivot. But in about 17 minutes, Jerome Powell is going to be speaking, where I think that we can get a little bit more insight of when is the next time that you would consider not just pausing, but potentially a rate cut, right? That would be a huge reason on why the market could skyrocket or why the market could dump. If he factors in, hey, this is a rate pause, we want to see how the market reacts, but another rate hike is not out of the question. And I believe that's what he might say. And I think that could even cause more selling pressure and more fear being injected into the market. But again, that's just my opinion, so we'll have to wait and see. Why predict when he can react? Lunch. Yep. I'm eating some Raisin Canes right now. I'm so hungry. I've had a little busy morning filming my little videos for you guys. So I really do appreciate you guys taking time and joining me for this FOMC live stream. I really hope that it's of value for you. And on top of that, I hope that it's something where, we can work together. And if it's just me answering any open-ended question, if you're a beginner, shoot me a DM. Again, it's all linked in the description down below. You can shoot me a DM via Discord or via Instagram. Or if you want to end up being able to watch me trade live, I trade live every morning. And that's that second link in the description down below. So really happy to have you here, and hope to have you as a part of the team soon. All right. So again, in 15 minutes, Jerome Powell should be speaking, obviously, because you guys got me to 1,300 likes. I'm very grateful for it. I'd be more than happy to host the live stream. It's going to be for another about 45 minutes from now. So that's why I brought my food, because, well, I haven't had anything to eat today. It's nearly noon here. So I hope some of you guys don't mind me enjoying my little 3-piece meal from Raising Cane's. Don't worry, I'll try not to chew in the mic, right? For those that get disgusted. Do you see how we're lacking progress? So if you're asking the question, Ricky, why are you not adding more to your position size on TQQQ? One of the things that I love, this is where the big value is for my LPP team, for my live trading sessions. It's to understand the thought process on, the stages of adding more to your position size. And if there is no progress being made, if it's not making me any more money, why am I going to try to fuel it more money, right? Any open position is a position that's open to risk. And that's one thing that I always try to preach, is that if there is no signs of continuous progress, if it's not showing signs that it's potentially going to make you more money, then why get ahead of yourself and fuel it more money, right? Add more money to it. That just, it's counterproductive at that point. You're being hopeful, and that's counterproductive in the sense of the whole reason that you're managing your position size is to enter in an effective way. So just wanted to explain to you on why I'm not adding more, because it was showing signs of a resistance. And like you see right now, we're pulling on back to our previous support at 38.30. So we'll see where TQQQ goes. Powell says that if you don't join LPP, he's going to short the market. I love that. Sauce is too good. I agree, Dawson. Sauce is too good. All right, getting rejected right now. We have 12 minutes until Jerome Powell speaks. Let me go ahead and get that live stream up. All right, still getting rejected. So will you stream Powell speaking? Of course. Yep, Alexander. That's why we are still here on this stream right now. It's not just watching the markets react. I would have closed out the live stream already if he wasn't speaking, right? I know you guys don't want to see my ugly little face here just watching candles go up and down. So in about 11 minutes, Jerome Powell's going to be speaking, and that's when market should be reacting to that. So adding 500 more shares here. Testing, showing signs of a support, going to retest. Looks like a double bottom. Will you reduce your position size if it breaks below 38.42? I have no reason to reduce right now. My position size is very light, and it's the whole reason that I enter light, because direction is obviously not favorable, right? It would have to be like a very active sell-off for it to be significant enough for me to be like, okay, I need to get out of my 2,000 shares. I mean, again, it's all perspective. 2,000 shares in comparison to what I trade with is a very still light position. That's like if you trade with 100 shares, you're going in with 5 or 10 shares. Obviously, you're still open to risk, but the dollar amount is very minute in comparison to what you can tolerate. But of course, some form of risk management is always necessary. So I took a short position. Congratulations. I do want to remind you that, again, when Jerome Powell speaks, often, not always, nothing's ever 100%, but often we tend to see a potential, we see more volatility when he begins to speak. So just understand that the market could be bearish right now. It could continue to be bearish when he begins to speak and how he answers questions, or it could potentially recover and be bullish. So I just want you to be aware that right now we're reacting to the rate pause. Then he speaks and answers questions, and based off of the way that he answers and how he answers will determine if the market continues to sell off or if it rallies. Again, just making you aware for those that are complete beginners and have never watched an FOMC meeting. So the first part is the rate hike. The second part is hearing him speak and how the market reacts. It's kind of like an earnings call, earnings report. There's the earnings report and then there's a guidance call, right? There's almost two reactions to every earnings report because the first part is to the report, the second part is to the actual guidance. So just want to make sure that you're aware of that. You're asking to lose money trying to short this. Again, Hunter, that we say that right now. I'm obviously going long right now. But just because I'm choosing to do something doesn't mean that other people are wrong, right? You might see it one way, other people might see it another. Again, all we can ever try to encourage one another to do is that whatever opportunities we choose to take advantage of, that we do it in a way that manages and mitigates risk, right? Everyone and to each their own. There's no one way of doing what it is that we all do. As long as we are forward thinking in the sense of how much does each trade cost me? Because every trade comes at some form of cost, right? And the cost is the risk that is about to take place. So as long as you're doing something to manage or mitigate your risk, that's all I can ever encourage a beginner to do. I'm not going to ever be here to tell you when to buy or where to sell. That's something that you need to decide on your own. And if you can't decide, then you shouldn't be trading, in my opinion. Do you think that interest rates will increase? I don't see there to be a reason on why they would increase if rates are pausing, right? So interest rates increase when Fed raises interest rates, right? Because then it makes it more expensive for banks and other institutions to borrow money. So if it makes it more expensive for them to borrow money, then they make it more expensive for us to borrow money, right? Therefore slowing down demand. But if they're pausing and then when we get into the rate cuts, then that means that institutions, banks, and businesses can begin to lower their prices. Therefore, again, hopefully markets picking up. And this is what the market tries to factor in advance. 2 more rate hikes coming. Some dumb bro. That's what he's saying. Okay. There it goes. Going back to retest. It looks like we are still seeing a descending resistance. Do you see this? Descending resistance. Something to pay very close attention to. All right, guys, 7 minutes until JP speaks. JP is the head of the Federal Reserve, also known as Jerome Powell, also known as the greatest of all time, also known as the GOAT. Who loves Jerome Powell? Let me see a show of hands. No one does? The Rolex dude, that is correct. The roly-poly, the Submariner, the cash printer, the printing machine, the Big Papa, the Papa Pal. We got him, what do they call him? It was like Black Air Force JP, something like that. I don't know what people were saying, but you guys crack me up. This live stream is probably one of my favorite live streams because it's not even because of me. It's because of you guys. You guys are so entertaining in the live chat. All I ask you to do is to please try to be appropriate, especially if you're not going to be appropriate, then please be respectful to one another. Okay? That's the biggest thing. I don't want to have to mute you or to remove you off of that live chat if you're being disrespectful to one another. Okay? Stimmy Daddy. Ooh, I like that one. I haven't heard that one yet. Stimmy Daddy. Get it? Because he printed, or he prints money and he printed the Stimmy checks. So Stimmy Daddy. I like that. It's creative. JP, don't call me Morgan Powell. Papi Chulo Powell. You guys are too good. All right. 5 minutes. Don't worry, Jerome Powell always likes to be fashionably late. One thing that I do want to remind you is that in the very beginning of his speech, he reads off of this paper. It's a script, and the script is always the same, at least what I've heard. It's always the same for every FOMC meeting. And then he gets to answering questions. And when he gets to answering questions, that's when we see most of the market react. Okay? Here we go. All right, testing lows. Jerome Gutierrez. JP, the market takeover. All right. Testing same support, but again, at this point, it's not showing any signs of progress. So. All right. Four minutes left. 4 minutes. I want to see a show of hands in the live chat. How many LPP members do we have here? So I know there's a handful of people that obviously are just watching maybe for the first time or are just subscribed to the YouTube channel. How many of you guys are part of LPP and tuned on into today's live session? LPP gang, there we go. Hope to meet you soon. What's going on, Lux? LPP here, nice. There we go. Love to see it. Happy to see that you guys are still here even closer to market close, right? These people wake up every morning at market open and watch me trade live every morning. So again, do I miss a couple of days, maybe out of the month, maybe one or two, right? How do you guys think I do? Right? Out of going live every single day, right? I feel like I try to the best of my ability to go live as much as possible every single day at market open, anywhere for about 30 minutes to an hour. So again, LPP is the team that I work with every day. They are the team that get to watch me trade live every day. And if you're a complete beginner, again, just ask yourself, would it be a value for you to be able to watch me trade live every morning right at market open? And that's what they essentially get access to. It is a one-time payment, lifetime access. And right now we are running our biggest sale. You don't have to join, but again, if you want to check it out, it is the second link in the description down below. And if you join, then again, you can watch me trade live as soon as tomorrow. So LPP, first time chatting. What's going on, Rodent Up? What's up? What's up? Happy to have you here. LPP, yeah, you know me. That's probably one of the most classic comments. All right. 2 minutes left. 2 minutes and JP should be speaking. You guys ready for it? Big Papa. I feel like Jerome Powell, at least in my opinion, has more influence than President Biden. What do you guys think? His influence right now is insane. Anything he says or anything he does, right? How he speaks on behalf of the Federal Reserve just has so much influence. Here it goes. Looks like market's going to try to recover. There it goes, going back to retest. Okay, we got 30 seconds left. Still waiting for him to come on. See where we're at, 5 minute, 30 minute, everything looks dandy. Nice pullback, nice push. Here we go. All right. It is 11:30 a.m., which means 2:30. There it goes. He is going to be on. Let's go ahead and switch it up. Come on, Jerome Powell. All right, guys. Hope that you guys enjoyed this. I'm going to put the microphone closer to this so you guys can hear Big Papa speak, known as Jerome Powell. And yeah, if you have any questions, just let me know in the live chat. And remember, you do have to be subscribed to the YouTube channel to participate in the live chat. Thank you. He's not speaking yet, as you can see. He's not there. He's running fashionably late. His Rolex fell off and he had to get a new one. There it goes. Woo! Let's get a round of applause. Look at that. The money printer. Here comes the script.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time.
That's a big one.
And I will have more to say about monetary policy after briefly reviewing economic developments. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year,
Watching for the
well
break.
below the median estimate of the longer run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile and food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening,
Sold 5,000 shares.
The committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a 0.5 percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Colby.
All right, you guys' favorite part?
Thank you, Colby Smith with the Financial Times. I'm curious
Oh,
what
you guys
gives
like
you
Colby.
and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So, I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were three issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive.
For those that are asking where my P&L is, I'll show you guys right now. But when it comes down to trading during my live sessions, I don't like to look at how much I'm up or down, as it's not important to the actual trade, but I'll show you guys right now.
Consecutive 75 basis point hikes, we moderated to a pace of 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
That's actually really
important. So there
important.
was no kind of initial debate about the possibility of July, any sense of the initial support at this stage for that move?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July, two things. One, decision hasn't been made. Two, I do expect that it will be a live meeting.
That's good to know.
Thanks, Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative
like that
here,
look.
because it feels like there's been a level shift in the dots. Stronger GDP, less of a hit to unemployment, slower progress on inflation, and I'm wondering in this sort of where's the disinflation coming from?
Sure.
The labor market's going to be stronger. It looks like it's not coming from there. Demand is not coming down all that fast, according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit.
5 minutes.
Inflation estimates moved up a bit. And, all three of those kind of point in the same direction, which is, that perhaps more restraint will be necessary than we had thought at the last meeting. So although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incident
Here it goes.
in March. So,
watch for the break above.
So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time.
Look at this.
And I think you go back to the three-part framework
breaking
for core
above.
PCE
Watch.
inflation, which
Let's
is,
see.
we think, as good an indicator as you can have for where inflation is going forward. You start with goods.
It's
with
going.
Goods, we need to see continued
I
healing
should
in
wait.
supply
I'm gonna
conditions.
wait. I'm gonna wait.
Conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels.
Back in the green for TQQQ.
As that goes through the pipeline. In fact,
did we call it?
Any forecast that people are making right now about inflation coming down this year will contain a big dose of this year and next year will contain a good amount of disinflation from that source, and that's
some higher highs.
Probably going to come slower than we would expect. That leaves the big sector, which is a little more than half pardon me, of core PCE inflation. That's non-housing services, and we see only the earliest signs of disinflation there. It's a sector, it's a very broad and diverse sector.
Have to hold above that moving average.
Parts of that sector, the largest
Pulling on
cost
back.
would be wage costs. It's the service sector, so it's heavily labor intensive, and I think many analysts would say that the key to getting inflation down there is to have a continuing loosening in labor market conditions, which we have seen. We have actually seen, I could go through a number of indicators suggesting there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the conditions that we need to see in place to get inflation down are coming into place, and that would be growth meaningfully below trend. It would be a labor market that's loosening. It would be goods pipelines getting healthier and healthier and that kind of thing. But the things are in place that we need to see, but the process of that actually working on inflation is going to take some time.
Potential support here for SQQQ.
Nick Timmeros of the Wall Street Journal. Chair Powell, what's the value in pausing and signaling future hikes versus just hiking now? I mean, not to be flippant, but I don't lose weight just by buying a gym membership. I have to actually go to the gym. 16 of your colleagues put down a higher year-end 23 rate today. A majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today?
So first,
that's a good question.
The question of speed is a separate question from the question from that of level. Okay, so and I think if you look at the SEP, that is our estimate, our individual. It's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting. It's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward, and we'll get to see. We don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get
Watch
this
for lower
right.
lows.
And this is if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
I know you said July is
little
live
stutter
with
there.
only one June employment, with only the June employment and the CPI report for June due to be released before the July meeting. You get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting, it'll really be a 3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more conclusions from that than you can from any 6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector.
Beautiful.
We'll look at all the data, the evolving outlook, and we'll make a decision.
Keep going. Keep going.
Gina. Thanks for taking our questions. Gina Smiley, New York Times. You obviously, in your forecast, marked up the sort of path for growth, marked down the path for unemployment, marked up the path for inflation pretty notably. I wonder, since March, what has changed to make you think that the economy is a lot more resilient and inflation is going to be a lot more stubborn? And given that, why do you feel confident that this is as high as you're going to have to revise the federal funds rate, or do you think it's possible we could have even a higher than 5.6% terminal by the end of this cycle?
I mean, on the first part, I just think we're following the data, and also
Is that what was the question?
The economy is the labor market. I think has surprised many, if not all, analysts over the last couple of years with its extraordinary resilience, really, and it's just remarkable, and that's really, if you think about it, that's what's driving. It's job creation, it's wages moving up, it's supporting spending, which in turn is supporting hiring, and it's really the engine, it seems, that is driving the economy. So it's really the data. In terms of, we always write down at these meetings what we think the appropriate terminal rate will be at the end of this year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually in reality wind up being lower or higher. And there's really no way to know. But it's
Getting closer to overbought levels.
What people think
Just a heads up.
Today, and as the data come in,
Getting close to power hour.
The intermeeting period, it could wind up back in the same place. But it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Mr. Chairman, thanks for taking my question. You had said back at the end of May that you thought risks were getting closer to being into balance. Is that still the case, or has your mind changed about the balance of risk
Steve
out there?
Leisman.
And also, could you give us an idea
CNBC.
of what would be a sufficiently restrictive funds rate? Obviously the current rate, according to the committee, is
All right,
not
I'm
sufficiently
out.
restrictive. Is it 5.6? Is it 6? Where's sufficiently restrictive? Thank you.
I would say again
Out.
that I think that
Out,
over time,
out.
the balance of risks, as we've moved from from interest rates
There
of
we go.
effectively 0 now to 5%.
Can you guys guess how much I'm up?
With an SEP calling for
You guys wanna
additional
guess?
hikes, I think
I don't
we've
know.
moved much
I would
closer
say
to our destination, which is that
north of 4,000, north of 4,500.
almost by definition.
Ready? Again, I've sold it all. I'm choosing to play it safe. Don't copy me. It's still going up.
Or getting closer.
You guys can do whatever you guys want to
I
do.
still think, and my colleagues agree, that
There it goes.
the risks to inflation are to the upside still.
5,600.
So we don't think we're there.
$10.52, 50 cents, 51
If
cents.
you look at the
There it goes.
at the full range of
I had fun with you
inflation
guys
data,
today.
particularly the core data.
I really did.
You just aren't seeing a lot of progress over the last year. Headline, of course, inflation has come down
That was fun.
materially, but as you know, we look at core as a better indicator of where inflation overall is going.
What I'll do.
Sufficiently, so I think what we'd like to see is credible evidence
Here it
that
goes, pulling
inflation
on back.
is topping out and then beginning to come down. That's what we want to see. Of course, that's what we want to see. And I think it's also, we understand that there are lags, but remember that it's more than a year since financial conditions began tightening. I think the reason we're comfortable pausing is that we are still, much of the tightening took place over last summer.
Very
Later in
overextended.
the year, and I think it's reasonable to think that some of that may come into effect. So we're, I think stretching out into a more moderate pace is appropriate to allow you to make that judgment of sufficiency.
There it goes.
With more data over time.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions.
All right.
I wanted to ask further on.
We'll end
the
with
lag
Rachel.
effects. When you're considering when you would hike again throughout the course of the year, are there things that you would expect to kick in as those lag effects come into effect that would inform your decisions? Have you learned things over the past year that give you some sense of timeline for when to expect those lags to come into effect?
Yeah. So it's a challenging thing in economics. It's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off. By the time we had lifted off, the 2-year, which is a pretty good estimate of where policy is going, had gone from 20 basis points to 200 basis points. So in that sense, tightening happens much sooner than it used to in a world where news was in newspapers and not on the wire. So that's different, but it's still the case that what you see is interest-sensitive spending is affected very, very quickly. So housing and durable goods and things like that. But broader demand and spending and asset values and things like that, they just take longer. And you can pretty much find research to support whatever answer you would like on that. So there's not any certainty or agreement in the profession on how long it takes. So, then that makes it challenging, of course. So we're looking at the calendar, we're looking at what's happening in the economy, we're having to make these judgments. And again, it's one of the main reasons why it makes sense to go at a slightly more moderate pace now as we seek that ultimate. I can't point to that ultimate endpoint. I can't point to a specific data point. I think we'll see it when we see inflation, really, really flattening out reliably and then starting to soften. I think we'll know that it's working. And ideally, by taking a little more time, we won't go well past the level where we need to go.
I was curious if you could give us an update on what you're seeing on credit tightening since the bank incidents from March and how you're teasing that out apart from these lag effects.
So it's too early still to try to assess the full extent of what that might mean. And that's something we're going to be watching, of course. And if we were to see what we would view as significant tightening beyond what would normally be expected because of this channel, then we would factor that into account in making rate decisions. So that's how we think about it.
All right, guys. Again, you guys can YouTube search FOMC press conference if you guys want to continue to watch it. I had a lot of fun with you guys. I hope that you guys enjoyed this little live session. This is kind of just a little snippet. Again, I trade live every morning for about 30 minutes to an hour exclusively with the LPP team. No, you do not have to join. And no, I do not necessarily take active trades every single day. I show up every day for at least 30 minutes to an hour. And depending if an opportunity presents itself within that time, I do take trades. If you are struggling as a beginner and you think that it would be of value for you to be able to watch me trade live every morning, if you liked what you saw today, then again, it's just a taste of what the LPP team gets to experience every single day right at market open. I'd love to have you tune on in. Again, LPP is a one-time payment, lifetime access. We're running our biggest sale. You don't have to join, but if you want the biggest discount, and again, if you want to sign up and be able to watch me trade live starting tomorrow, it's the second link in the description down below. And remember, it's a one-time payment, lifetime access. There's no monthly reoccurring fees, yearly fees, or anything like that. You get access to being able to watch me trade live every single day. And of course, if you have questions along the way, feel free to message me. LPP is not for you to copy what it is that I'm doing, as again, you should never copy anyone when it comes down to trading. But I really do appreciate you guys taking time and joining me for this FOMC meeting. I love hosting these sessions with you guys, and I really hope that you enjoyed it. Drop a thumbs up. Make sure you subscribe if you guys haven't done so already. And please do not hesitate, even if before you join LPP, if you have any questions, send me a direct message via Discord or via Instagram, and that's the first or third link in the description down below. But again, if you want to join LPP and you want the biggest discount, second link in the description down below. I appreciate your time. Hope that you enjoyed this session. Again, walked away with a little bit over $5,000 on the day. You guys saw all my entries. You guys saw all of my exits. And you guys saw how I averaged up into that position and how I quickly reduced my position size. That's one of my main things that I focus on, is position size management is so important and so crucial when it comes down to trading. And I'm happy that I was able to showcase it to you guys successfully in this live session. Appreciate your time. Like always, let's make sure that we end the year